Hi everyone. Thank you for joining me. This is Simon Sahi here with Signature Properties. I'm a local real estate agent here in Los Altos and I cover South Bay and Peninsula area. If you're a buyer or a seller in this market, you might not want to miss this video. There is a ton of great information about this and I have done a presentation which will give you a very good idea where our market is heading and is it a right time for you to buy or sell will give you in-depth knowledge. Let's get into it. All right, so we're talking about the housing bubble here. All right, let's take a look at this and go to the first common questions and fears from buyers. Will I be caught up in a bidding war? Maybe I'm going to buy and the market would fall out. What if I buy and then the prices will drop? Well, the short answer is no. Here's the three factors for that: low inventory, population growth, and interest rates. And I'm going to talk about that. All right, let's talk about the low inventory. The San Francisco Bay Area is always in a state of low inventory since 2015. If we look nationally, about 1.2 million homes were available in 2015, which has rapidly declined to about 422,000 homes for sale, which you can see we have less and less inventory available year over year. The stats don't lie. We are at the point of being 65% off from July 2015, as you can see in the chart. Basic economics tell us the demand is fixed for a long period of time. And if you have less supply, the demand goes up. Hence, prices will continue to rise. Santa Clara County inventory, the Bay Area follows the same pattern every year. We have a predictable wave of inventory and then a period of less inventory, but what we are not seeing in overall increase in inventory and our peak of inventory are getting smaller and smaller in numbers. To top that off, new construction has down 33%. All right, let's take a look at the population growth. Who's buying? So this is a very interesting topic, which a lot of first-time home buyers don't realize who is their competition and who's buying. So my research says the millennials are buying right now. The ages from 22 to 39 are the biggest group of buyers. As you can see from this chart, they're the largest home buying demographic since the baby boomers, with 79 million people versus 75 million people. So not only we're seeing the inventory decreasing, we're seeing the demand being increased because they're in the prime buying age. Millennials, Gen Z, and post-Gen Z demographics make up more than half of our US population, and it's still growing. So that's just a fun fact for you guys. Okay, so as you can see here. All right, let's talk about over the next 40 years, what are we looking at? We're looking at 75 more million people. So we have high demand for housing for everyone. So we need more housing, just as simple as that. So if you take this growth of 75 million people over 40 years, that is a growth of 1.875 million new people per year. The real problem is a matter of affordability. The median income from 2012 to 2021 grew 41% nationwide. However, the change in median home prices also increased 108%, eclipsing the median income by more than 2 times. This is one of the biggest reasons we got so many homeless people and people on the verge of losing their homes. They are priced out of where they can be and where they wanted to be. This is a huge challenge with demand. Let's take a look at the fixed rate chart. Interest rates are at an all-time low, and we keep seeing them dip lower right now. They're about 2.87, depending on the bank you go with. I have some lenders I can refer to, can get you a better interest rate, but this is just a chart throughout the lending industry. So it's a 30-year fixed chart. In December, of 2018, as you can see in the chart I have for the reference, the interest rate was about 4.8%. So that is a drop of 42% or 200 basis points. It's a big deal when it comes to your mortgage. How big of a deal is that you can actually understand you get half off on your mortgage. Let me show you a little breakdown on that. For example, if you purchase a home in 2018 for 1.5 million, your mortgage payment would be $7,934 per month. If you have a same house, $1.5 million in August 2021, your mortgage payment would be $6,219 per month with the interest rate of about 2.87 interest rate. This is a savings of about $1,715 per month, or $20,000, $580 per year. So if you could afford, $7,900 monthly mortgage in the 2018, now you can actually afford a $1.9 million house. So a reduction in 200 basis points would increase your buying power by $400,000. Now, that's one of the reasons why more buyers are out there, and that's one of the reasons why there is people who are just continuously bidding up to just get the house. That is an enormous impact on funds available to purchase, right? So interest rate outlook. Now, in July of 2021, Fed held federal fund rates between 0 to 0.25%, which is the cost of money from government. They are holding it low to give economy a boost to grow back since COVID restrictions, to give people a chance to recoup and get back to work. Many economists and realtor associations are expecting interest rates to go up a bit to low 3% range later 2021. But I really don't think there's going to be a huge impact on that in the market. So key points to take a look for. All right, so the first one is job and wages are the big indicators. Are wages going down and unemployment going up? That's a big red flag, but we're not seeing that in Bay Area. Second, a decrease in population or increase in housing inventory. That is a sign of upcoming changes, but it's not happening here in the Bay Area. Third, if we are a rapid increase in interest rates, that is a big red flag and concerning. But again, we're not seeing that now. And the government is incentivized to keep rates low. Matter of fact, people are making more money now than ever staying at home, working from home for the past 2 years in the pandemic, and their spending habits have changed. People used to go travel a lot, go eat out a lot. Now they're actually not doing that. So they're spending more time with their family. So they need a bigger space. They realize how important it is to actually have a house with an extra bedroom, or to have an office space. So what are they doing? They're thinking to purchase a bigger house. And they also see the properties are continuously going up, especially in the South Bay or in the Peninsula. So it makes complete sense to them. And they're not traveling as much to go to work. Stock portfolios are up. So they are in a better position and situation, interest rates being low, to actually buy a bigger property. So let's talk about key takeaways. So just to remind you of the key takeaways here, we're not in the housing bubble. We're in a housing crisis. Demand will continue to increase as population grows, as wages grows, and as unemployment decreases. The supply is not keeping up the demand. Interest rates are super low, but inch up over time. In the longer term, the economy will dictate prices, and the data show that prices will continue to appreciate. If you're on the fence about buying, or you're not sure what's going to happen, the key here should be to get into a property as soon as you can and at least get your foot in the door. As a property owner in the Bay Area, you will start gaining appreciation and equity right away. You cannot grow wealth in real estate if you aren't in it. Standing on the sideline does not bring you the value. And paying rent is just not really a long-term solution. If you make good money, you're paying rent. It's just you're not utilizing your money properly. My advice, do not wait for a correction in prices, which is a number one question. Either you're a first-time home buyer or a buyer who's been in the market looking at hundreds of properties a day. The trend here is properties go in the market within a first open houses a weekend, or next week they just take offers. In my view, correction is won't coming soon, and if it does, most people hold their asset and go into job protection mode. If you think uncertainty is too great now, what will allow you to make a huge investment in an unstable market? And I want you to just ask that question for yourself. So if you own a home, don't sell unless you will do something better with that money. But there are situations where it does make sense to sell. If you want to downsize, relocate, or buy more real estate, those are great reasons to sell. I don't recommend selling just because prices are high. It's not worth the gain to become a renter. That being said, either you're in the market to purchase a property or you just starting, wanted to have an in-depth knowledge about a specific city or a zip code, I can be an eye and ears for you. I can also guide you and educate you. What's the best move for you? Every seller buyer has its own situation. Because of my previous experience, I tend to navigate very difficult situations from my previous clients, and more than happy to do that for you as well. So if your friends or family who is thinking to purchase or thinking to sell, please do contact me. My info is all over here, simonsahihomes.com. My cell phone number is 650-274-1134. If you have any questions or concerns, please feel free to contact me. You can make a 10-minute call with me, and I'll be do my best to help you out. I hope you guys have a good day. Thank you for your time.